All right. Good morning, everybody. Welcome back to another episode of the Tim and Tim Show. This time it's just me. Tim Best is traveling and on vacation this week, so I'm flying solo, and I'm excited to do it. It's been a little while since I've done a solo show, but nonetheless, it's going to be a good one. We're talking about something that is difficult for a lot of people, and a lot of people will tell you that they have trouble raising capital. And I personally believe that it's because they don't understand what investors want. So this week, I'm going to talk a little bit about how Tim and I have raised money through private investors, through private equity, from family offices. We've done a lot in the terms of capital raise side of things. I think we've raised, as of today, a little over $60 million of private equity between a combination of all of those investors. And that doesn't really even count a lot of the JV deals and things like that that we've done. So, I mean, it could be mid 60s towards the upper range there. Uh, so we got a little bit of experience when it comes to raising capital. So I think that you buckle up and let's talk about some things. And I hope to get some feedback from you guys to help you be a better capital raiser. So first and foremost, the thing that you need to do in order to raise money successfully from investors is understand what the investor wants. The less you talk in a conversation with an investor, the more information you're going to get. And that seems like, no, duh, Tim. That's not I didn't join your show today to hear that. But some people need to hear that again because they think that what you need to do is sell an investor. They think that you need to good morning, Dennis. You broke my train of thought there for a second, but good to see you, buddy. It's the Tim and Dennis show today. No, not Tim, Tim, and Dennis. All right. So, understanding what investors want. It's important to sit down and build an investor profile for your investor. What I like to tell people, not investors, but other people that try to do what I do, is you need to build a buy box for your investor that they don't even know that they have. What does that mean? What you need to do is ask them questions about their risk profile, their long-term gains, their goals, like what's more important, equity or cash flow? What are they using the cash flow for? Because sometimes they'll tell you, and then you might actually steer them another way. I mean, I had a conversation literally yesterday, with a potential investor who owns a dumpster company, and they were talking about wanting good cash flow from the real estate investments. And I understand, look, everyone invests for cash flow in some way, shape, or form. But I kindly had a conversation with this investor, and I was like, hey, look, I don't think that you should be focusing on cash flow. And here's why. You own a dumpster company that's making significant cash flow every year. You have the cash flow side of your life figured out. Real estate cash flow won't make you rich, but what will is the equity growth from the equity multiples that can come from investing in real estate. And he was like, I never really kind of thought of that way. And I was like, well, just continue to work in your day job. Like your day job is owning your dumpster business, much like anybody that's a doctor or a lawyer that has a very good, high paying W-2 job. That person has cash flow figured out. What they're trying to build is real wealth at that point. And I said, I think that, through this conversation with this investor, I said, I think that what would serve you best is to go into deals that have a significant value add. You're younger, even younger than I am. And I said, now's the time to take the risk on those types of deals where you can invest it and you're going after equity multiple more so than cash flow. And he was like, well, we want to retire and we want to do this and we want to do that. And I was like, and I know, for those of you like Dennis that watch the show all the time, that I talk about cash flow follows equity, right? So as your equity balance continues to increase, the cash flow will naturally follow. And what I mean by that is it's a lot easier to make 4, 5, 6, 7% cash flow and cover your monthly expenses if you have a very large equity balance invested, right? And you're like, oh, well, duh. Of course, it'd be a lot easier to make $700,000 a year if I had $10 million invested, right? Naturally, because you have the money. So what you have to focus on, and what I personally focus on myself, is growing my net worth and my equity balance sheet as much as possible, as fast as possible, so that I can open up my opportunity to many more in type of investments that are lower cash flow, like 5, 6, 7%, but more long-term sustainability and more safe. When you invest into lower cash deals, they're generally higher class deals like Class A investments in the multifamily space, or maybe you're buying some triple net locations that the cash flow is pretty low because your risk is pretty low. But like when you have $10 million invested, like you're probably going to be okay living off of $700,000 a year if you're making 7% per year. But if you only have $100,000 invested at 7%, you're not going to really feel a $7,000 increase in your monthly cash flow or quarterly cash flow or annual cash flow at that point, right? So me personally, whenever I invest money, I always defer everything. I'm like, I don't even give me the 7% because it's not really going to help me today. What will help me is if 3 years from now my 100,000 turns into $121,000, right? Now I have $121,000 to invest, and we'll continue to grow that balance, right? So respectfully, sometimes you can have a good conversation with an investor and learn what they want. And generally, most investors know what they want, or they think they know what they want. But the more questions that you ask them, the easier it's going to be for you to build a buy box for them so that you can present an opportunity to them that they're going to like. I've said this multiple times in the past, but like I invest in multifamily, right? So if you ask me to invest in your multifamily deal as an LP, I'm probably going to tell you no because I have access to that myself under my own deals. But if you came to me and said, "Hey, I have a business that I'm looking to bring investors into, and the cash flow is substantially higher than what you could get in a real estate deal," then yeah, I would be interested in that because I already have enough money in the real estate world. But it's the more questions and the deeper that you dive, with that investor and have a really good understanding of their personal financial situation, how they're making their money, when they want to retire, what they're trying to do with the cash flow, what they're trying to do with the equity. The more you talk to them about it, you build this buy box of like, hey, I know what this investor is going to say yes to, and I also know what this investor is going to say no to. And it really helps you spend your time wisely, putting good examples in front of people so that they say yes to more options of your deals. Sean, good morning, buddy. Good to see you. I know it's bright and early for you out in Alaska. I think you're 5 hours behind, so it's about 5 a.m. your time. So good morning to you, buddy. So understanding what your investor wants, build your investor buy box, ask them a lot of questions, understand what they're looking for, what they're not looking for. It's a lot easier for people to tell you what they don't want than what they do want. So ask negative questions, not like to get a negative response, but to for them to identify what they don't want, because it will quickly chop out the list of opportunities and options that you would put in front of this person, increasing your possibility for them to say yes into a deal for you in the future. Um, so the second part of that would be building credibility and trust. Uh, it's no secret. There's a big reason why I do these weekly calls is because it helps build my credibility and trust with investors. Every single week, an investor that is interested in investing with me can come in here. They can watch these videos. They can understand how I think. They can understand why we make the decisions that we do. And ultimately, what I'm trying to do by building my credibility and trust with investors through this podcast is I want those investors to say, you know what? The assumptions that Tim and Tim make on their deals are the same exact assumptions that I would do myself. When you get to that level of trust and credibility with an investor, it's very easy to raise money at that point because now they know that you're making the same decisions that they would, right? So they're okay with the level of risk that they're taking because the assumptions are the same. It's the only difference at that point, once you're looked at as an equal that makes the same assumptions, is that this person has the money that wants to invest passively in a deal that they would have bought themselves. They just don't want to do the work. That's where I come in. I do the work. We have the management company, we have the construction teams, we signed our debt, we raised the rest of the money that's necessary. But the people that invest into our deals agree with the assumptions that we make in our underwriting, and they would make the same assumptions themselves. That's why they trust us to invest their money with us, because we're one and the same. We're no different than anybody else, right? Another way that you can build your credibility and trust is so I don't know who this LinkedIn user is, but another reason why we do this is to be seen. When you're popping up on people's Instagram feeds and Facebook feeds and LinkedIn feeds, Twitter or X now, I guess they call it, the more you show up, the more familiar people will become with your name. And then you will be shown in front of them more frequently. And that gives you the opportunity to share your assumptions, to share your mindset, to share your wins, and to share your losses, your successes, and your failures, and all of the things that make you you. And eventually, what you'll find is you build a cohort of people that trust you, right? They agree with you. They're like, "Wait, this guy, he knows what he's talking about. I trust him. I really like the way that he presents himself and the things that they have brought to the table together as a team." And they could operate this deal far better than I ever could because I do XYZ thing over here, right? And they now trust us because of the assumption. They trust us because of the successes. We've built the credibility and trust with them. And I can honestly tell you, like, I probably have in my investor portal maybe 350 people. Of those 350 people, I think I have had 75 investors. So, what I'm trying to illustrate to you is you don't need a lot of investors to be successful in real estate. You only need a handful of people that will write you a check for $50 to $100,000 each. A handful, right? You can be very successful and very dangerous with a very little amount of money, right? Um, Joe Bisbing says, great points. I have always focused on what they tell me they want. You make a good point, though, asking by guiding them by building a buy box for them. Yeah. Joe, the only thing I was ask them what they don't want because it makes it super like, what kind of deals are you afraid of? Right. What kind of deals is an immediate no for you? For me, it's self storage. It's immediate no. Mobile home park, immediate no. Just because I don't know anything about it and I don't want to. And that's fine. That's okay. I'm not that investor. And you too will come across investors that tell you, no, I don't want to invest in Cincinnati, but I do want to invest in North Carolina. Okay. Now I know if I get a North Carolina multifamily deal, I'm going to put it in front of this person because they've told me they want to invest in North Carolina. So be the person that brings the solution to their problem, which is I have money, but I have no opportunity to place money to earn money. You are the person that they need in this life, in this world, because you bring the golden goose, which is opportunity, to the table so that they can invest their money and make money with it. I can't tell you how many people I have met that have money sitting in their 401k, their IRA, even their checking account. I've come across people that have hundreds of thousands, if not millions of dollars in their checking account that they just don't know what to do with it. They don't trust the stock market. They can't seem to buy a real estate deal. They've tried, it's just they're so busy with so many other things. It's just difficult for them. Be the person. We're like, hey, well, I got a deal you can invest in. This is what it looks like for you. Be the easy button for that person, right? Um, all right. So then once you build your credibility and trust, that's the major hurdle, right? Understanding what your investor wants, building credibility and trust. Those are the paramount things that you must have in order to be a good capital raiser. Once somebody trusts you, it's the defensive wall starts to come down, right? Of, well, why should I trust you? Right. But if you present the opportunity for them where you create a lot of social media content, you talk openly and freely on podcasts, I'd say we're open and we're honest and transparent about everything, our wins, our losses, our failures, everything in between. And that builds trust. And once you can get past that hurdle of trust and you understand what they want, the rest of this whole thing gets a whole lot easier, right? I mean, it's gotten to the point now where I will send a text message to a couple of my investors that I know that like to write big checks. I'm like, hey, high level details, this, and this. Are you interested? Actually, yeah, we are interested. And I've had a couple of people reach out and they're like, hey, I'm planning now for Q1 and Q2 of next year. What do you have coming? And let me tell you, it's a lot easier to raise money when people tell you that, right? And it takes a long time to get there. I mean, we've been doing this for, man, Tim Vest has been doing it longer than I have, but I've been doing it for about 5 years now. And it takes 3 to 5 years to really build a good investor network and have that level of credibility and trust with them, where you start going full cycle. You pay them their dividends. You pay them the exit proceeds, you make a little bit of money. Hey, look, not every deal goes the way it's supposed to go, but you didn't lose anybody's money, and that is far more critical for your resume and your track record than anything. I mean, we've got some deals where we thought we were going to do 18-20% average annual return. We sold it, we did about 10 or 11, and investors are still okay with that. And it's it's unfortunate. Okay, let me first label that. It's unfortunate because we don't feel like we capitalized on the opportunity, but we did the best that we could in an unknown environment in terms of the debt and insurance. Like, I mean, I keep talking about that every week, but that's been a huge pain in our side. It has eaten up equity growth because of the increase in expenses. Thankfully, we executed on our business plan, and therefore we were able to exit and make a little bit of money, but we didn't forecast that a lot of these things were going to go up as much as they had. And investors are okay with that. They understand. They understand that I can't control a lot of things, but hold me accountable to the things that I can control. And as long as you execute on those things, then you have to have a conversation with them and be like, look, I did everything I promised you I would. I can't control these things, and this is what happens. And more often than not, you're going to get a thank you. I know that you did your best, and I'm glad that we made a little bit of money. It wasn't as much money as we thought, but not every deal is going to be a home run. Okay. Um, yeah, that's right. Pressure over time equals diamonds. Yep. And what has been the best source of investor connections for you over the years? Honestly, this, all right, it's creating a platform for you to talk openly and freely with your voice and your message. You have to attract people to you so that they will hear what you have to say, and you have to do it consistently. Like, I know my man Dennis over here, if I don't show up on a Tuesday, Dennis texts me. He goes, "Hey man, what's going on? Are you okay? Like, why don't you do your show today?" Right? Because we've been doing it for 3 years now. Every Tuesday for the last 3 years, we've been doing this. The consistency is important because it builds your credibility, trust, and track record. What you like, how you present yourself is how you do everything. How you present yourself is how you do everything. And if you can't be consistent and show up when you said you're going to show up, then why would an investor think that you're going to show up when you have to, when a deal gets difficult, right? So just know that people are watching all the time. And I have to say, Joe, just to kind of close that loop, the most amount of activity that I've gotten are from what I would consider lurkers, the people that don't post anything, they don't like your like or comment your stuff. They watch and intently, and they're listening and they're learning and they're observing. And then eventually that person will send you a message and be like, "Hey man, I've been watching your stuff for like 2 years now, and I'm finally in a point where I want to invest, and I trust you, and I feel like I know you because you've been doing these shows for such a long period of time. I see you, associated with a lot of people in your network, and you have a good reputation. And you are somebody that I would invest my money with because of your reputation, because of your thought process, because of your credibility, track record, and trust that I have in you. And if I was going to invest money with anybody, it's going to be you. And you don't need a lot of people to tell you that. You only need a handful of people to tell you that. So just know that people are watching all the time. All the time, people are watching. All right. So again, back to once you build your credibility and trust, the rest of this is easy. Your presentation and understanding the numbers of the deal that's where you could lose it. Right? Is you climb this mountain. You've gotten over this hurdle of trust with these investors that are closed off to you, that are like, well, everyone has an opportunity, why should I trust you above everyone else? The next part, the presentation, it's got to be direct, it's got to be correct, and it has to tell the investor what they need to know at a glance. Because what Instagram and Facebook and what do people call it now? They call it like doom scrolling, right? If you can't catch somebody's attention in like 5 seconds or less, you lost it, right? So you have to be able to create a professional investor pitch deck that tells them exactly what they need to know. First and foremost, how is their money protected? Why is this a good investment opportunity? And when are they getting their money back? Those are three things that everybody wants to know: is how are you going to return my original capital? Returns don't mean as much as getting my original money back, right? Returns don't mean as much as getting my original money back. If you can tell them all of the assumptions that you've made about how you're going to get an investor their money back, that's going to get you part of that buy-in and that credibility and that trust. Like, for an example, so we do a lot of deals with bridge loans. It's no secret, right? We do value add deals, we do bridge loans. When I get on a conversation with an investor and I tell them, "Hey, this is what we're buying it at on a price per door. This is what we're going to be all in at, including our capex, and this is where I think it's going to be valued at." Okay, well that's good. Then more importantly is when we go to refinance, I assumed that we're going to get 60 or 65% leverage at this rate for this amount of term. And if we can get 60%, I will be able to return X amount of dollars, right? Now you show them worst case scenario, which you think could be the most probable. But generally, what I would do is I would say, okay, I'm going to run it at 60, 65, and 70% leverage on the refinance and say, if I can get 70% leverage, I'm going to give you 90% of your money back. If I get 60% leverage, I'm going to give you 50% of your money back, right? And when you set the expectation, it really helps the conversation later down the road because they know what to expect. They know the range. And if they're comfortable with the range, they're more likely to say yes, right? Yeah, that's also true. People invest with people that they know, like, and trust. Big. I mean, I've been talking about credibility and trust. I think that that's more important than anything. But they have to like you too, right? I mean, you can't be somebody that is very abrasive that they don't want to get, that they don't want to associate themselves with, right? So be a friendly person, be inviting, be. I like to use the Ted Lasso thing here. Is be curious. If you understand what an investor wants and you're curious and you ask enough questions, you really build credibility and trust pretty quickly. Um, okay, back to presentation. So be simple. Tell them what they need to know. When are they getting their money back? What are the assumptions that you made? And you have to really understand this is kind of like one and the same, right? Your presentation has to tell the information that you need to deliver, but you also need to know the numbers. And I think that's part of the reason why I have been able to really kind of excel um, in the capital raise world is because I love the numbers. I'm great at the numbers. I have a better understanding of the numbers than most people do. And when I can talk eloquently about the IRR, the AAR, the equity multiple, the refinance terms, the debt rates, what's going on in current events, that's also a big one. When you can talk eloquently about all of the different things that could affect your deal, that comes back to building more credibility and trust. If you're being pitched a sales pitch, right? And somebody comes in and talks to you and they're like, um, I might be able to do this. I think that it could do that. If you have a lot of doubtful words in your vocabulary, inspire doubt in your investor. But if you're confident because you know your numbers, you've done your research, you've done your due diligence, and you know what you know, then your confidence will be felt on the other side of the table. And when you're confident, people are attracted to that confidence. Because if you're not confident, they're going to question why why you, right? Like, why should I invest my money with you? If you're not that confident in this deal, there must be something that you don't like, and therefore I'm out, right? And you lost it. You lost your opportunity there. So obviously, don't do bad deals. Be confident in the numbers that you present. Use hard data. Use facts. Um, we use one of the things that really helped out us lately. I mean, because taxes and insurance have been something that we've been battling. We do the tax abatement process in North and South Carolina, and that really helps free up of some cash flow for us. The other thing is the insurance. I get a big question on, well, how are you going to mitigate against the rise in insurance? Well, we moved everything to a master insurance policy, and this is our average price per door across our 1,400 unit portfolio. So I underwrote to this number because I'm going to add it onto this master policy, and therefore I know exactly what my cost is going to be, right? When I know that level of information, it really helps solidify that my underwriting is going to be as accurate as it possibly can be. Now, look, people, underwriting at the end of the day is purely speculative because I don't know what's going to happen 3 years from now. Maybe we have insurance rates double again. I don't know. Maybe rent rates go down 10%. I don't know. Um, but that comes back to building your credibility and trust and telling investors what your assumptions are. And if those investors would have made the same assumptions, then they're going on for a ride with a piece of the risk, because nobody's got a crystal ball. Everyone has to make assumptions. You just have to get other people to agree with your assumptions, right? Because that's all investing is you assume the value of this property or this investment or this stock or whatever you're putting your money into is going to go up, and here's why I think that, right? People do that in stock market, like investing in Tesla. I don't know anything about Tesla, but you could ask somebody that invests in Tesla why they think the stock is going to go from wherever it is today to the moon, right? I mean, cryptocurrency, people love talking about cryptocurrency. I don't know anything about cryptocurrency, but if you talk to somebody enough and you understand their assumptions and you actually agree with their assumptions, if they put something in front of you as an investment opportunity, maybe you would consider it, right? So yeah, I mean, so understanding your numbers is critical. Uh, I one thing that I like to do that helped me out a lot when I was first starting to raise money was I would make a list of all the possible rejections an investor would have and pre-think what the question is going to be, right? So the faster you're able to respond about a question, I mean, it's being prepared. So the more you prepare, the better you'll be to respond to any question that an investor might have, right? And look, I'm not going to lie to you. There are times an investor will ask me something that I didn't think somebody would ask me. And I have to say, hey, sorry, that's a great question. I should have thought of that, but I didn't. I'm sorry. Let me go research that and I'll get back to you, right? Don't lie about it. Don't make something up, but acknowledge that you missed something, because we're all human, and you'll get back to them and actually follow through with getting back to that person with the answer that they're looking for. It's not that hard. It takes time, it takes commitment, but I got a running list on my desk of all the things that I need to do, and part of the things on my list are questions people ask me that I need to get back to them on. It's really not that hard to do, but you try to pre-think as best as you can so that you can respond in an intelligent manner with anything that they might have objections to or want to have a deeper understanding for. Um, wh- so, do you try to find out where they're more comfortable as far as their return? I ask them, what are you looking for in a return? Are you looking for cash flow? Are you looking for equity multiple? Are you looking for a 10-year hold or a 2-year hold? Like tell me what your ideal investment looks like. And also tell me what the worst investment you can ever make looks like. Identify both ends of the spectrum so that you can build your investor's buy box. Um, are there sources you look at daily or weekly to help you make business decisions, like web page, blogs, and podcasts? Honestly, I just kind of keep up with what's going on in current events. I use Twitter or X to get a lot of the current events. I liked that because of the community notes aspect, where if somebody posts something that's not true, the community notes will call it out that it's fake news or whatever. So I generally like the uncensored information that I get from X, but paying attention to things that most affect real estate. I actively seek those things, like what's going on in the stock market. Watch last week's show. Last week's show, we talked about how the stock market impacts the treasury yields. The treasury yields are directly tied to commercial lending rates at agency lenders. Those are the types of things that I'm actively looking for so that I can be educated and knowledgeable about what the political environment and the macroeconomic environment are doing to affect my deals, because I need to be informed to make a decision. And the more information that I have about things that impact that, I can make decisions quickly and hopefully the right decisions. Not always the right one. I mean, we should have refinanced deals, like I think it was in October of last year when the rates dropped down, like the treasury yields dropped significantly. I should have refinanced a bunch of properties then. I didn't. I was optimistic that they were going to keep going down. That didn't happen. So we had to wait it out. We paid for some extensions on some deals, and now the rates are going back down. So it's ended up working in our favor, but it could have likely gone the other way. I learned from my past mistakes, and I understand a bird in the hand is better than two in the bush. And if the rate works and I can get the refinance and secure debt for a long period of time, that's usually the best thing to do for yourself and your investors over the long run. Um, some investors may or may not want to hear that, but at the end of the day, you have to make the decisions that are good for the greater good of the deal and the greater good of the investors involved into the deal. So actively looking for information that affects your day-to-day business decision making in the commercial real estate world is important. So no, I don't have any direct sources. I just kind of stay up to date with what's happening in terms of political changes, the stock market going up or down, what the treasuries are doing, uh, continually talking with insurance brokers and debt brokers and all those types of things to have an understanding of, like, where are we today in today's market, and where do experts in their field think we're going over the next 60, 90, 120 days, right? And you just stay current with that stuff all the time so that you can make decisions and act on them when you need to. So yeah, but all of this builds to your credibility and trust. All of it builds to your credibility and trust. And so I'm going to kind of wrap it up there, but understanding that you have to understand what your investor wants. You have to build your credibility and trust with your investor. You have to what balloons. You have to Your presentation is important, but what's more important is the information behind the presentation and the person behind the presentation. People, like Joe said, they invest with people they know, like, and trust. So once you cross that bridge of or that mountain of the credibility and trust piece, presenting a deal and understanding your numbers is exactly with what you would think it would be. But just know those things inside out and backwards, and try to pre-think questions that people will have so that you're prepared enough to have an educated conversation about the deal that you're presenting. So those are most of the reasons. That's essentially it. There's no secret sauce here. It's just doing doing the same thing consecutively over a long period of time builds your credibility and trust. Try to take as many phone calls as you can with investors. You'd be surprised. Just answering the phone will build credibility and trust, because I can't tell you how many people just don't even answer the phone. So don't try to overcomplicate it. Just work on building relationships with people, and let everything else work itself out. As you continue to get better and better in the industry, more and more experienced, these conversations will come more naturally to you. But at the beginning, it can be a little daunting. It could be difficult, but you got to try. You got to do it the first couple of times. You got to exercise that muscle, and eventually, in time, you will have success in capital raising. And then you're off to the races after you start to build a little bit of credibility and trust with some investors. You start to build your track record, and it gets easier and easier and easier and easier for sure. So, all right, guys. Well, thanks again for joining today. I'll see you next week. Peace.